Imagine waking up to a rental market where rents are climbing, demand is exploding, but with twists you won't see coming. If you're a landlord, tenant, or just curious about where Salt Lake City's housing is headed in 2025, this is for you. Today we're diving into the top 5 factors driving the Salt Lake City rental market. Hi, I'm Nick Jensen. And as Salt Lake City's rental scene evolves, understanding these influences can save you thousands or help you score that dream lease. Based on the latest insights from local experts, we're looking at economic growth, migration patterns, supply challenges, policy shifts, and affordability pressures. By the end of this video, you'll know exactly how to position yourself. Factor 1, Utah's red-hot economy. Salt Lake City isn't just a crossroads of the West anymore. It's a magnet for tech and finance jobs. With Silicon Slopes expanding, companies like Adobe and Overstock fueling a projected 3% job growth in 2025, more professionals are flocking here for high-paying gigs. This influx means higher demand for rentals, pushing average rents up from last year. But here's the good news for landlords. Vacancy rates are dipping below 5%, so your properties could command premium prices, especially as new supply has been getting rented in 2024 and 2025. Moving on to factor 2, the great in-migration. Post-pandemic, Salt Lake City saw 15,000 person net gain annually, and that's accelerating into 2025. Why? Affordability living compared to coastal cities, outdoor paradise vibes, and remote work flexibility. Young families and millennials are snapping up spots across the Wasatch Front. This surge is tightening the market, with applications piling up 20% higher than pre-2023 levels. Pro tip for renters, use apps like Zillow for alerts. And for investors, target family-friendly units near tracks lines. Factor 3, limited housing supply. Despite 8,000 new units greenlit for 2025, demand is outpacing it 2-to-1, thanks to zoning hurdles and construction costs up 15%. In core areas like downtown Salt Lake, this means longer wait lists and rent hikes in multifamily buildings. Landlords, this is your cue to maintain properties impeccably with professional management, helping to boost occupancy by 10%. And if you're hunting, consider emerging suburbs for fresh inventory. Number 4, policy changes and interest rates. With the Fed eyeing cuts in late 2025, mortgage rates could ease, tempting some renters to buy, but not enough to flood the market. Locally, Utah's new eviction reforms and rent control debates add layers of complexity. Landlords should consult professionals to stay compliant and maximize their returns. Finally, factor 5, affordability squeezes. Salt Lake City's rent-to-income ratio is creeping toward 28%, stained by inflation and lifestyle costs. But the city's walkability and ski access keep it appealing. So what is our prediction? Hybrid living, co-living spaces, and short-term leases will become popular. Advice for landlords, offer flexible terms, tenants explore income-based programs. There you have it, the forces that seem to be shaping Salt Lake City's 2025 rental market. Growth, migration, supply policies, and affordability. Whether you're investing or renting, stay informed and proactive. If we at NV Property Management can be of help to you, feel free to visit our website at nvpm.com or call us at 801-337-4337. Thanks for watching, and we'll see you next time.